Good afternoon. Welcome to the Weekly Livestock Market Update. I'm Brownfield anchor reporter Megan Grebner. With us today is Texas A&M University livestock economist David Anderson. Good afternoon, David.
Hey, good afternoon.
Thank you for pinch hitting for us. Scott is out sick today, so we appreciate your time and coming in to chat with us.
Oh, I'm glad to do it. I get to be the new and improved Scott Brown.
We will make sure that he sees that.
That's right.
David, before we get into talking a little bit about a lot of trade conversation that we're going to have today, let's start first and recap what happened this week in the markets.
Sure. I guess I'd pop off right away. My first thought off the top of my head is a whole lot of nothing, really, because, if we start with the hog market, for instance, relatively steady prices this week compared to last week. Just, not a lot of movement there. And the cattle's the same way, as is often the case in the fed cattle market. Here we are on a Friday afternoon, and we don't have any cash trade yet either. We still have offers and bids that are pretty far apart. And so we're going to keep holding out and see what happens later in the day as we go longer and longer towards the weekend. We still got feedlots holding out, and that's sort of where we are. And that's not uncommon. I'd probably also say, we see things like, I find this time of the year to be pretty interesting in a lot of ways in livestock markets. We go from Thanksgiving through New Year's, and I often characterize it as a lot of squirrely things happen. So sometimes we have weeks with not a lot of anything other than a lot of livestock going to market and a lot of meat being produced.
And that's really been no joke. As we take a look at the hog side of things, another big week with slaughter runs and pushing that 2.6 million head number again.
Another big week. Pushing record upon record. Yet it's also something we expected to be seeing as we've increased pork production. We've increased hog numbers, and those hogs, as we increase farrowings and the trend of pigs per litter, we were headed for record production and record slaughter this fall, and now we see exactly what we thought we were going to see happening.
I think that one side of things maybe that we're looking at with a little bit of optimism at this point, we have a new NAFTA agreement. Yesterday, Canada, Mexico, or early this morning, Canada, Mexico, and the U.S. inked and signed on the dotted line for that agreement. David, as we take a look at that, what does that mean for specifically the U.S. pork sector?
I think as we talk about pork, we talk about hogs in this. I think, one, it's a real positive that we got something signed, that we got something negotiated, that throughout the whole broad reach of the old NAFTA and this new version of it, that we got something signed by the executive of each country, our presidents. Now it's got to go to approval at the legislative branch in every country, and that can bring a bunch of hurdles as well. So we're a step along the process, and I think that's great. From me as an economist, a market economist, we tend to see trade as being a positive. That's our growth market. Across agriculture has been exports. And so, something that opens up markets, maybe reduces some trade barriers, that helps us move along and sell some more stuff, that's a positive. And so that's really great. I think as far as pork and the rest of agriculture, I'm not sure there's a whole lot of change from the new NAFTA compared to the old NAFTA, other than maybe we reduce some uncertainty, we get something signed, and that's great. I'm not sure there's a whole lot of change. And I think it's important to note that a lot of the tariffs we've been concerned about are tariffs that we put on outside of NAFTA, outside of the agreement that we've imposed on Canada and Mexico, that spurred a bunch of retaliatory tariffs. And those tariffs we've been concerned about on the pork side go far beyond Canada and Mexico to China, to some of these other really important markets for our pork industry. And so that we've signed this new agreement doesn't really take away the tariffs, the retaliatory tariffs and those rounds of tariffs that are really what we've been really concerned about in being able to sell record amounts of pork, those problems, those barriers, those tariffs, and those hurdles to overcome are still there.
So this is our door, the open to the, or maybe the door opening to be able to fix those tariffs now.
Yeah, I certainly hope so. That at least we get some agreement. Maybe we get something signed. Maybe we can keep talking and we can move towards going back to what we had before, which is a lot, at least a lower tariff scenario for moving pork.
Can the same be said for the conversations between President Trump and President Xi from China with their discussions this week?
Well, I got to say, at least I think it's a good thing that we're talking. When we slap on tariffs back and forth and we're not talking to try to fix the problem, then it just becomes round after round of tariffs and a tit for tat problem. So at least we're talking, and I think the fact that we were talking actually spurred some increase, at least in the hog futures market this week, as some of that word came out that maybe gave us a little bump. While it didn't result in a lot throughout the week, there was at least some movement within the week, and so I think it's a positive that we're talking. Talking's one thing, getting to an agreement is something else.
Hopefully we're on our way there. Does it also maybe put a stop to that next set of retaliatory tariffs that they've been talking about putting into place at the beginning of, I think in end of this year, beginning of 2019?
Yeah, there's been a lot of talk about another round of tariffs. So hopefully talking maybe ratchets down that talk a little bit. Maybe it forestalls some of that next round. And every time we hit another round, there's another round of retaliation, and there's a whole nother selection process of additional products. We think about hogs, we think about all the cuts of pork that we consume or that we export. It opens up the opportunity to expand those tariffs to even more of our products. I think one that some of our own meat industry's been concerned about, particularly some of our Texas meat industry. We talk about casings. Anybody that's making sausage needs casings, and a lot of our casing material goes to China for processing and comes back as a finished product to go into our meat industry. So another round of tariffs, as it hits casings and some of those other products that we might not think a lot about, actually have a big impact on parts of our industry. And so every time we get another round of tariffs and another round of retaliation, we start worrying about getting down into the fine print of the lines and exactly what products are being hit. And I think it makes the effect of those tariffs even more important on our industry, again, with record production going on.
David, as we wrap up, kind of a slow week coming out of the holiday, getting into the next set of holiday seasons, conversations this week and some comments out of the Federal Reserve. Talk to me a little bit about the chairman's comments and how the ag sector, specifically farmers, ranchers, need to take maybe that into consideration and how that plays into their bottom line.
I thought the comments in the speech by the Federal Reserve Chairman were pretty interesting. So the Federal Reserve does have a lot of influence on interest rates, particularly one particular rate, the federal funds overnight rate, and other interest rates, both of terms under a year to T-bills to longer Treasury bonds. Those rates do respond to that, as well as overall conditions in an economy. But he actually made some comments that they were approaching what they call neutral territory, meaning that as the economy is strengthened to try to prevent a rapid increase in inflation, the Federal Reserve had been increasing interest rates. And when they say approaching neutral territory, the simple explanation is they're getting closer to a point that maybe they've done what they needed to do and they can wait for a bit. So that sort of implies some thinking that maybe we've seen maybe the bulk of the rate increases for the time being, although there are still some others that they've signaled that they're going to increase a little bit more. But we're getting closer to this neutral idea. Where I think that's really important on the ag side is most all farmers borrow money. And we've gone through a series of a long-term set of years of generally falling interest rates. And, that's one of those areas as we look at across all of agriculture we think about fairly low commodity prices, whether we're talking milk, cattle, hogs, a lot of our, corn, soybeans, pretty low prices that have been below many producers' costs of production. And so we're trying to control costs, but interest rates that increase our borrowing costs are where a lot of where our macroeconomic linkages are from the broader economy right to our bottom lines. And so I think that's kind of an important thing to remember, that we have benefited from some lower interest rates, a generally low interest rate environment for a number of years. But as the economy heats up and as interest rates begin to rise, that hits us in our bottom lines in an area that we really can't control. And we see more and more headlines of farmers struggling in parts of the country with low commodity prices, increasing rates of bankruptcies, and just that struggle to figure out how are we going to make costs and prices work. I think that's an important area that I found pretty interesting over the past week.
David, thank you so much for joining us this week. Thank you for your time.
Hey, thanks for having me on. I appreciate it, and I enjoy the opportunity.
We will, I'm sure, have you back again sometime.
Great.
To have our weekly livestock market update delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com. You can click subscribe. You can also submit questions and comments there as well. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Megan Grebner on Brownfield.